Ahoy there, traders. How are you doing? How are we doing? Friday the 13th. Are you superstitious? Awesome, Brett. Great to hear from you. Are you superstitious? Lots of traders are. I could tell you some funny stories about some pit traders that I um, used to work with many years ago. They were the most superstitious bunch of people that you could ever meet. Um, Mainly because, just a little bit of a sidebar while we're just waiting for everyone to log in. Mainly because um, there was lots of traders who were superstitious because they were trying to recreate the day. If they had a good day, they were trying to recreate it. And I remember one trader that I knew, he was on a winning streak. So he tried to recreate the day every day, so that he could just relive the day and relive the results that he was getting, which in a bizarre twist meant that he stayed in the same clothes, got absolutely smashed drunk at the end of the day, because that's what he did on the previous day, because he had a bad day the previous day, went to commiserate with a few too many drinks, got in a fight, walked home, worked the next day, missed the train, late to work, lost a shoe, went the wrong way around the turnstiles in the trading pit days. And that was the start of his day. So he was doing that for days, trying to recreate. And then that's when he hit his winning streak. So he attributed that to the fact that he kept getting shit-faced drunk every night and getting in a fight and being late to work. So funny things. Okay. Superstitious bunch. Anyway, so the markets are doing something weird, and I sent a few notes out to various people in communities that are very kind enough to interact with me on a regular basis. And just talking about the market needed an uptick today, an upward movement, because I think everyone would have become very superstitious. That it's one of those, not necessarily self-fulfilling prophecy, but if we'd start to seeing a big sell-off today, I think that we could have seen a panic sell-off because it was Friday the 13th if the markets were going down. I've seen it before, for no other reason. It's Friday the 13th. Personally, I'm not that superstitious. I don't really care one way or the other. I just want to follow the numbers, follow the money, follow the footprints. But yeah, there are people out there that are very superstitious when it comes to things like this. Anyway, everyone's here who's here. Hello, Adrian, Anthony, Bal. Banu, are you new? Brett, of course, yeah. Okay with the selling, yes. Dennis, hello. Dennis, Mark, Perry, Randall, not my friend. Rodrigo, Steve, you are my friend, just to piss everyone off. Surely, that guy. Who's that guy? That guy number 12. Hello, Tom. Hello, Vito, Zeke, and YB. Hello. Let's get into it. If you are new, this is the type of agenda that we have. I'm going to talk at you for an hour. If you want to talk to me, pop a comment in the chat box. It does make it better. I'll just spend 2 minutes just showing you who I am. If you are new, and if you just want to know who I am, who the weird guy with the weird voice and the accent behind the microphone is. I'm going to take a look at the markets. We're going to look at production line trading, which is what I refer to as my strategy. And we're going to look at the top stocks, because I've been a little bit negligent in my reviewing stuff. Again, I've spent more time taking profits this week than I have looking for new trades. I'm in most things, so I don't need really to take new trades. Nonetheless, production line trading is what I do. Let's go and look for some opportunities. If you are new, the big concept, or one of the main concepts behind what I do, is trading money flow, trading the trend. And most people misinterpret what buying the dip actually means. We need to add the qualifier in the context of the trend. And that's what makes production line trading a little bit better than everyone else's, because we're going to find a buyable dip in the context of a trend. We're not going to buy any dip, any down day, any red movements. We need to find buyable dips in the context of the trend. Like in the S&P markets at the moment, this is not a dip. This has turns into a sellable rally. So we can also look for the opposite, and we'll take a look at some examples in just a moment. Long story short, I'm going to spill the beans on my strategy. As usual, I'll give you as much as I can in the short space that we have together today. I do give a lot of what I do away for nada. But nonetheless, if you want to go further, faster, quicker, if you want to work more closely with me, I'm not ashamed to say that you can work more closely with me. This is as hard a pitch as you're going to get from me. I'm a trader first, I'm an educator and a mentor second. I don't need to do it, but I love doing it. It's one of the pleasures that I get out of life, is helping good traders become great traders. How to get most value out of today's session is you like, comment, interact, ask questions. I've got the chat box open on the other monitor. If you're watching this live, if you're watching this on the recording, pop it in the chat box below or the comment box, and I'll get to it when I get to it. Quick warning before we do get started. This is a diamond hands free zone. We're not YOLOing. We're not diamond handing. We're not looking for meme stocks. We're following rules. We will follow a systematic process to find, filter, and sort stocks. And the other thing that we're not going to do is we're not going to be zombie trading. Hands up, who's done it? Who here has flicked through chart after chart after chart after chart like a mindless zombie for hours on end, never finding anything to trade, and then only finding the good stuff after it's already moved? If you've done that, pop a little comment in the chat box. Maybe let me know the stock that you've missed, the stock that you should have taken, that you know that you could have, would have, should have made some money on, but for whatever reason you just didn't. If you want to review some stocks, pop the ticker in the chat box and we'll review it. I've got one of those fancy algorithm things that I can just plug it into the software, and we can look back at the rules that I'm about to explain to you and see if that stock would have been worth trading or not, as the case may be. Anyway, we follow rules. I'm not going to advocate flicking through thousands of charts. It's a waste of time. It does allow me to go and have fun while we're waiting. Yesterday, for example, while everyone was losing their collective shit over another down day, I was enjoying a lovely spa day. Why not? I get to enjoy the fruits of my labor. Usually I'm hiking or up a mountain, and my wife's had back surgery, so we're not doing less hiking at the moment. But it's all because we're following rules, we're following a process. And it's really boring, if we're going to be honest. Rules are boring, but they make money. And that's all that matters. Would you rather be clever, fancy, creative, get to stroke your own ego, look at the stocks that I've selected, or the markets, or the timing, and the other bullshit that people bang on about? Or would you rather make some money? I think I would rather make some money than stroke my own ego. Again, don't confuse confidence with ego. Again, I come across as being an arrogant dick, shall we say. But I'm pretty good at this. There's lots of things in other areas of my life that I'm not good at. But this I'm good at. I'm just confident. After doing it for 28 years, you do get some resilience. You do tend to get good at it. But yeah, yesterday, RCL, I let each and every one of you know about this well in advance of it going. In fact, I nearly missed it. I think, was it Randall? Was it you saying, hey, are you on this? And I realized I wasn't. I nearly missed it myself, but we were talking about it. I just forgot to put the damn trade on. Nonetheless, trade on went straight to targets and closed as with several other positions yesterday. Mark, I'll take a look at those tickers in just a moment for you. Run stock. This again is another sellable rally in a downtrend. These are all going to be bearer stocks. The market's selling off. Absolutely. Randall was on that as well. It was a great stock. 110% return on capital. I tend to trade with options. It means that I don't have to stress in the way that I described earlier by, worrying, is my stop going to be hit? Is it in the right place? Blah, 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 all the other bullshit. I'm just going to buy an option. In this case, buying puts. So, for example, $1,000 in and $1,100 out. So that's what that 110% return on the capital used means. Quick drink. Run stock 55%. Not my best trade in the world. I'm running out of time on this mainly. If I'm going to be honest with myself, I mismanaged it slightly. I should have closed it out sooner. That's just the way it is. That's the price I have to pay from time to time by not being glued to the screen. It's not common that it happens. It's not critical for me to manage it and watch trades on a day-by-day basis. But I'm going to be honest and transparent. I've got to say that it probably could have been managed a little bit better. That's just the way it is. Nonetheless, Coop makes up for 199% return on capital. Another sellable rally in the context of a downtrend. Teladoc, TDoc, 256% return on capital. I'm mentioning this not to brag. Please don't confuse what I'm saying. I'm trying to illustrate that when you follow a rule-based process that's driven by data on the right stocks, which I'll show you in just a moment, that it works. Absolutely works. So that's all you need to do. So that's what I'm trying to illustrate. Again, please don't confuse my confidence with ego or bragging. I'm not that type of person. It's a fine line between the two, so just don't confuse it if you're new. Brett, coming from Brett, I was high-fiving people yesterday when they were closing out 15% up on the portfolio. One day for last week. Well done, Brett. Again, awesome. New to the community. Well done indeed. So again, when it comes to rules and strategy and process, again, whether it's my strategy or someone else's strategy, just follow a strategy. That's really all you need. And you don't need to be trading everything every day all of the time. You just need to focus on a few things that are proven to work with a simple set of rules and follow them, and you will make some money. So who is this weird guy with a weird accent banging the drum about following rules in a process? I am just a regular guy. I figured a few things out about 28 years ago. I went full time at the turn of the century. God, it seems such a long time ago now. I've been very fortunate to make it work. I like cake, coffee, books, working out. I like flamingos. I like enjoying life. For those of you who don't already know, I've got Crohn's disease. I've had my multiple near misses, and I value my time and life very precious indeed, because I'm, as everyone's all recently experienced, it can all just disappear, and we can all pop this mortal coil very quickly. So enjoy the time that we have. Again, I've got a weird thing for flamingos. Get over it. We've all got a thing. I don't know why. I can't explain it. It just is. And everyone seems to send me some interesting photos of flamingos from time to time. They spot flamingos in the wild for me. For example, Mark just this morning sent me a lovely video of dancing flamingos in our little private trader community, which nonetheless just makes my inner flamingo warm to the bone. So I've been trading since the 90s, been full-time for over 20 years, helping good traders become world-class traders. I've got to say this legally, I'm not a Wall Street guru, I'm not a financial advisor. You must most definitely not listen to anything that I say and consider it financial advice. What I can do is give you the benefits of my practical experience. I have been doing this for a long time, and what I do does work. Will it work for you? Only time will tell, but if you put in the work, you should be able to emulate something comparable. Legally, past performance, no guarantee of future performance, blah, blah, blah. Be responsible adults. Always tie shoelaces yourself. Don't walk and text at the same time. And don't walk and chew bubblegum at the same time. All these usual safety features should be applied to life. And your money is your money. Be a responsible adult. I'm sure we can all get the legal beagle parts. Anyway, I have cracked the code, as I mentioned, and it's repeatable. I refer to what I do as a production line. For a reason, it is a production line. I'm trying not to make discretion. I want it for me first. For all the reasons that I've just mentioned, I want to spend as little time as possible at the desk looking through charts. I just want to be able to go, here's the 5 things that I need to look at today, place the trades, and then bugger off and go and enjoy myself. I've been given a honey-do list for later today. I've got a Costco run to do. So that's what I'll be doing on Friday. We've got some friends to visit, so we're gonna grab some pre-done cakes and all that jazz, and I get to do whatever I want to do. And obviously being here is one of those lovely things that I enjoy doing. Anyway, I help traders plug into that system, the production line process. And I know it's a production line. It's not just me with a fancy marketing thing, because you tell me that you get results. Lots and lots of people get results with a systematic approach. They are getting their measure of success, your measure of success. Some of them are here today. Kevin is just absolutely nailing a short-term version of this strategy. So very well done. Duncan, I'm not sure if you're here today. Let me just see. Duncan, I think was market was down 12 or 20%, and his account's up 12% on the year. He's very happy, very excited just by following a simple process. So all I'm trying to illustrate really is, I'm not just saying it works, I'm trying to prove that it works. Again, whether you believe me or you don't believe me, like, there's the evidence in front of you. If you want to stay, I'm going to show you those rules right now. If you want to leave, by all means, feel free to leave. I ain't forcing anyone to be here, but what we do works, it makes money, and that's all that matters. Right, let's get into it. The markets are having a little bit of and I gag on the word, bounce for today. Don't be confused. This is not a buyable dip. Let's take a look at it. So we're on the S&P futures. We could be looking at any chart. I tend to use this chart to illustrate the process for consistency. It's got good examples and illustrations, but we can look at any chart. Again, I've already got a few from Mark, so we'll take a look at yours in a moment. Absolutely, Anthony, you can't beat the Costco cake at all. There's some things that, other people just do better than me. I do like cooking in the kitchen. I just don't get time to do all the baking side of things. Anyway, one of the things that I'm looking for, I'm using moving averages as my indicator of choice. The tool doesn't matter a great deal. What does matter is structure and consistency. They're more important than the tools. If we were doing this and we were sat here talking about the charts 5 years ago, we'd be looking at it through the lens of a Bollinger Band. It doesn't matter. It's exactly the same process when you have a structure. So I've got 3 moving averages on the chart. I've got a 20, 50, and 200 period moving average. There's nothing magical about them. There's nothing magical about the period lengths. All it does is allow me a frame of reference that is mechanical to say, where is price in relation to the averages? That's all I'm trying to figure out, because then when you start to have an exact level, again, the exact level, for example, being the 200 period moving average, that's not subjective. It is there. It is a statement. And when, for example, price touches the 200 period moving average, we can all agree that it has touched the 200 period moving average. And that's what an algorithm is. It's a binary statement. Has this event happened? Yes or no? And by looking at the markets through a binary decision, we take out subjectivity. Does everyone get that concept, first of all? So think about what you're doing right now. Are you applying subjectivity, or are you applying a definitive binary statement of this event has happened? So thinking about patterns, we could be looking at triangles, we could be looking at head and shoulders, we could be looking at widgets, flags, pennants. I was a pattern trader for 12 years. 12 years a Forex trader for my sins, and I was predominantly discretionary trading. I counted the patterns that I was trading at one point, and when I got to 34 different named patterns, and they've all got different rules and different interpretations, I stopped counting and just thought, okay, well, I'm doing something wrong here. I'm spending a lot of time doing the thing that I was telling you I shouldn't do, flicking through chart after chart after chart, looking for pattern after pattern, plotting trend lines and Dow 3 and GAN 3 and Elliott wave theory and all the other nonsense. And it's subjective. And it's subjective from the point of view. I'm not saying it doesn't work. It's subjective from the point of view that if I try and do it and you try and do exactly the same thing, we can come to different answers. We can come to different conclusions. It's not that you're better and I'm better. It's just, it's subjective. For example, if I started an Elliott wave count at this low here, I'm going to get a different count than if I start the counts at point number 2. It's not that one's right and one's wrong. It's just that we've started the process at different levels. So coming back to why we're using these moving averages, it's not that there's anything magical about the 200 period or the 50 period moving average or the 20 period moving average. It just allows me a mechanical binary statement. Now I can apply no discretion at all by making statements. Where is price in relation to the moving averages? So I'm going to have just stepping back a moment. When the 50 is above the 200, I'm going to be in a bullish state I'm going to have a bullish bias to the market. I'm not married to the cross. It's not an automatic buy, and I gag on the phrase indication. I'm going to be naturally biased to the bullish side when we have the 50 above the 200. And for the eagle-eyed amongst you, then that means that we can apply a bearish stance when the 50 is below the 200. Let me say that again. So very easy. Bullish over here on the left, bearish over here on the right. So on the left side, all the way to the from the blue cross to the red cross, I'm going to be looking for a buyable dip. Now, just for the purpose of simplicity, I'm going to focus on the 50 and the 200. We can add the 20, and I do as a part of the process. But just for simplicity, the 50 period is above the 200. I'm going to be bullish. So that is my directional bias. At that point, I'm going to look for what I consider a buyable dip. So we've got price with a bullish bias, and I need to see price moving upwards, obviously. And then I'm going to wait for price to move back down to below to the 50 period moving average. So there's the 50. I'm just highlighting it there. So when price comes back to the 50 period moving average, that's the point where I'll say that, my good dear friends, is a buyable dip. At that point, I will call it a buyable dip. Is everyone happy with that? So it means that I can ignore everything that is not at or touching the 50 period moving average and consider it noise. So I'm only interested in those times where price has moved away from. That's the part that I want to profit from. I'm looking to make money when price accelerates away. So there, as price comes back to these buyable dips to and from, I'm looking to, again, there's one that didn't work out there, but I'm looking to profit, and there's another one that didn't work out. So I'm looking to profit as price accelerates away, and I'm looking to buy or identify a buyable dip when price comes back to the moving average. Again, now you know that framework. You can't not see it. Is everyone clear on this? It's a very simple framework. Identify direction, wait for price to be pushing away from, so you will miss the first part of the move. That's fine. When you've got long-term sustainable trends, they can last for many, many months. If you look at this one, it lasted for certainly when it was confirmed and tradable, it lasted for over a year. There's plenty of opportunities to participate when you find a trend that's tradable and buyable, and we have the odds in our favor. Conversely, and we spoke about this in the last few weeks, for all this year, actually, all of this year, let me tidy the chart up. All of this year, and let me just get the thing. So there's the start of the year. Price went below the 50 period moving average. Let me zoom in, actually. So we've zoomed in so we can see it's a bit easier. So there's the beginning of the year. Price initially came between the moving averages, and it never went back above the 50, did it? Never went back above the 50. So there's no, we have this looks like a buyable dip. All we're waiting for is for it to go back above the 50 period moving average. Well, Mark, that's the point. That's a good question. Mark's asking a question. How do you know it was a buyable dip and not an exit signal? Well, we don't until afterwards. No one knows. I think you've got to get out of the knowing what's going to happen. What you're asking is what happens next. And in real time, sorry, just bear with me. I'm just trying to give you a realistic hypothetical. We've been monitoring the market all year, waiting for a buyable dip. So here's what would have happened if I just wind the hands back, and this is over a period of months. So you've got buyable dip. So price rallies, it retraces. It's the turn of the year, 2022, January 1st is right there. So this is our buyable dip. Price comes back below the 50 period moving average. So at this point, there's the criteria. This is a buyable dip. I'm ignoring all the down days until it comes to the 50 period moving average. And now I'm interested, but it's not an automatic buy. it's saying, okay, now I'm interested. Now I'm waiting for price to turn back around and give me my entry criteria for the entry, which are all rule defined and predetermined. And it's a little bit longer than we have here today to explain it. But we've got predetermined rules to say, here's what it looks like. There's our Bible dip. And we've got rules to say, when do we buy it? And for all of this year, we've been speaking about on these open sessions to say, okay, well, price is still waiting. Price is still retracing. It's a Bible dip all the way through this sideways movement. It's not an automatic buy signal. I'm still waiting at this point. Even though price is below all the moving averages, I'm still waiting for price to be above all the moving averages so that I can buy the dip. We found a Bible dip, but at this point, to answer your question, Mark, the 50 crosses the 200. So how do we know that it was not a Bible dip and an exit signal? Sorry, I've just realized the question that you're asking. The direction at this point changes. I'll come back and answer your question properly in a moment. The direction bias flips over at that point. Again, it's not an automatic sell signal, but now I'm biased to the bearish side. I'm no longer looking to buy the dip. If anything, I'm looking to sell the rally. In a downtrend, I'm now looking for a sellable rally. Price needs to go below the 200, and in this case, the 50-period moving average, which it did right there. So 4,400. Price went through the 50-period moving average at that point. So at that point, in real time, that's our sellable rally. And we know what happened next. Sideways, 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 and then wallop. We spoke about it in real time. Now, the way that you can place the trade is with, we looked at SPY, didn't we? So just to, oops, wrong slide deck, Phil, bear with me. Oh, done it again. What are you doing, Phil? One more time. There we go. So just to, there we go. So there's SPY. So there's our sellable rally. We got in at the location that we said, and we were targeting a very modest move in this case, down to $400, and that produced 101% return on capital. So we spoke about this several weeks ago, and again, I appreciate you may not have been in every open session. Again, I'm just trying to illustrate, like, I'm not doing anything with the benefit of hindsight. I never do anything with the benefit of hindsight. I don't know what's going to happen next. So what we're looking for now is another sellable rally. So price needs to come back to our moving averages. And guess what I'm going to be doing? If or when that happens, I'll be selling the rally in a downtrend. So right now, now's not time to sell the rally. Now's the time to take profits. It's moved away from the moving averages. I'm now looking for it to come back in so I can sell the rally in a downtrend. To come back to your question, I apologize, I misread your question. How do you know it was a Bible dip and not an exit signal? If you're in the trade, so for example, these arrows on the charts and the dotted lines, these are highlighting the algorithm that utilizes the rules that I've just explained. I can plug all those rules because they're binary. Has this thing happened? Yes. Okay. Move on to the next part of the production line. How do we know that it is not an exit signal or a Bible dip? They're both the same thing. They're both the same thing. It's going to be one or the other, depending on, like, so for example, if I just number these are all Bible dips. 1, 2, 3, 4. They're all Bible dips. How do I know it's a Bible dip and not an exit? Well, they're all Bible dips and they're all exits. If you're in at number 1, then number 2 could be an exit. If you're in at number 2, then number 3 could be an exit. If you're in at number 3, then number 4 can be an exit. If you didn't get in at number 1, but you did at number 2, and you were doing something else at number 3, then number 4 is your exit. They're all Bible dips and they're all exits. They're both the same thing. Does that make sense, Mark? Apologies for only realizing what you're asking me a moment ago. Cool, cool, cool. So now you know the secrets. Go and do it. It's not complex. So if you're in any doubt that it works, what we can do is we can take those rules that I've just explained to you and say, if I just did that, buy the dip, sell the rally, and do nothing else, without looking at the Fed, without looking at earnings, without looking at news, without looking at the weather, without looking at diamond hands, without reading Wall Street bets, without doing anything else other than putting the trades on and having fun. I did that for 20 years. The data, plug those rules. This is a back test. Then what we have is a steady equity curve, just like a chart. If I put $1,000 in on every buyable dip and sellable rally and apply the money management that I like, the way that I like to approach the markets, then I have a positive equity curve. Now, I'm again not necessarily looking at the dollar amounts, but what I want to see here visually is a steady equity curve. Start at the bottom left, finish at the top right. This is what a positive expectancy strategy looks like. This is a high probability strategy. Again, we don't really need to look at the specifics. We can do, but for the purpose of this, we've got a good positive expectancy strategy. So the next part is, now you know the rules. You've got the rules. Buy the dip, sell the rally. It is a statement. I'm being a jerk by enunciating words with full stops after all of them, but it's trying to drive the point home. Buy the dip, sell a rally. This is what it means to me. It's now quantifiable. If I just do that on a small number of stocks, I'm not doing it on every stock every day, all of the time, because we don't want to be zombie traders. I'm going to plug this algorithm into a small basket of stocks. So the only time-consuming part of what I do is I've gone through and pre-selected and pre-qualified what I consider to be my top 25 stocks, my top 50 stocks, and my top 100 stocks. That's what I've done. It's a little bit time consuming. I do it once every 12 months or once every 12 to 18 months usually. And that gives me these stocks here. So this over here is my top 25. Now what I'm going to do is I'm going to apply consistency to a list of stocks that are proven to work. You've got the rules, we've got the algorithm, we've got the data to define, like, does this strategy work long-term, consistently and regularly on this stock? Great. I'm going to apply the same strategy that it's proven to work on for the next 30, 60, 90 days. I don't know which trade's going to work out. I do not know what's going to happen tomorrow. All I know is that on average, over multiple occurrences, that this works. And why we do this is I'm banking on the fact that this trend of this strategy working on these group of stocks is probably going to continue for the next 30, 60, 90 days. It's unlikely that it will suddenly stop working on this stock, on this group of stocks more specifically. Does everyone get that concept? Perfect, Zeke. Perfect. Steve, I've just seen your comments. Oh, how kind. How kind. I'll share that in a moment. It's very kind of you to send that over, Steve. Lost my train of thought there while I took a drink. Oh, yeah. So the last part then is consistency. Instead of looking through thousands of charts, again, there are thousands of stocks out there. I'm just going to look at 25 stocks. Again, I've got 100, but let's just keep it simple. I'm going to look at 25 stocks. I'm going to farm the setups. I don't know which ones are going to work. I just know that if I take every setup every day, every week, every month, the next 12 months on these 25 stocks, then I should emulate. Can't guarantee that it will, but I should be able to emulate something comparable. This is a positive expectancy strategy. This is what it looks like. This is what it means to have a portfolio approach with a positive expectancy on a group of stocks or instruments. It works on ETFs. It works on crypto. It works on lower timeframes, higher timeframes. I like to apply this on the daily chart for all the reasons that I mentioned earlier, because then that means I can be up a mountain hiking. I can go and do something else. Like I've got a shopping run to do later. Yesterday, I plugged in to the markets for 20 minutes to take profits. That was all I did yesterday. And when you've got that, what do I trade question answered? Because that's the biggest question on everyone's mind. And then instead of trying to work out how do I trade, because we've all done it at some point, me included, we've all done it. Whenever you're looking at a chart, okay, we're looking at the S&P futures. We could be looking at SPY. It's the same thing. The biggest question that everyone has, and I get asked, is, okay, now I'm looking at this chart. How do I trade this chart? Well, you've got the rules. You know how to trade Bible dips. You know how. We've just answered the what's. The what should I trade? What should I trade? It's those 25 stocks. Why those 25 stocks? Because it's proven to work on those stocks. So when you've got a list of rules that you know works, you should have the confidence. And just to illustrate the point of why those 25, let's take a look at some of the stocks that have been posted. I'm going to start with Pepsi-Cola, PEP. This is my usual example. Like, why don't I trade Pepsi? It's a mega cap, multinational company, huge brand awareness, great dividends. By all accounts, it's a bloody good stock, a good company, been around for a long time. What does the algo say? Does the way that I like to trade match up with being favorable for this stock? There's the zero line, making money, losing money line. Making money, losing money. This consistently loses money for the way that I want to trade. It's not impossible to trade Pepsi. It's not that Pepsi is a bad company or a bad stock or you can't swing trade. I'm not saying that. Don't confuse what I'm saying. The way that I want to trade, which is feet up, pipe smoking, get all the benefits of being passive whilst being actively involved in the markets on a regular basis without having to check in every day, for hours a day at a time. I can just do this in 20 or 30 minutes every other day, go and do other things. And then I can be hiking, not worry about the Fed, not worry about the war going on, not worry about this, that, and the other. Just find opportunities, profit from them regularly, consistently on a daily, weekly, monthly basis, blah, blah, blah. You know the shtick. That's how I want to trade. You could trade Pepsi, but then the trade-off is I need to bring something else to the table for Pepsi. I need to apply patterns, discretion, down theory, GAN theory, Elliott wave theory. The trade-off is time. I value my time more than the efforts of trying to find a trade on Pepsi. Like, we could do it, but is it fucking worth it? We've proven that, like, there's 150 stocks that we could trade that are perfect, consistently, regularly, over a multi-decade approach that this strategy works on. Why would I try and flog a dead horse on Pepsi? I don't know which one's going to work, but I do know that it works on average on the other stocks. On average, this doesn't work on Pepsi. Why on God's green earth would I want to trade Pepsi? Find another way to trade Pepsi is all I'm saying, but not this method. Now we've got the concept and we know why. Let's look at Twitter. So Mark's suggesting Twitter, TWTR. First, it's probably not worth trading Twitter anymore. We've got the buyouts, blah, blah, blah. Looks like the buyout's failing. I've got a small amount of data. So this goes back to 2013. I've got some data. It has a positive expectancy, meaning that it's making money. But you can see that on the data that we do have, if I just highlight it, we've got that's the equity curve on Twitter. So is it worth trying to it's too many W's in this next sentence. Trying to trade Twitter. Is it worth trying to trade Twitter? Well, that's a tongue twister and a half. You try that at home, kids. Is it worth trying to trade Twitter with this strategy? Or should we go and find something else to trade? Again, I'm not saying that Twitter's not worth trading. I have traded. I used it as an example for, a long time because it was setting up some good examples for the way that I like to trade. But with the latest version of my algorithm, it's probably not worth flogging a dead horse. Let's go and find something else to trade. That's what's worth trading. So it's not no to Twitter. It's just I've got to bring something else to the table. I've got to bring the down theory, the GAN theory, the Elliott wave theory. Is it worth my time and effort trading Twitter when there's other things to trade? And what we don't want to do is I don't want to cherry pick one trade on Twitter. So this is saying that, okay, it is profitable, but it's not consistently profitable over multiple decades. Multiple decades. It's okay, but I need to apply discretion to trade Twitter. And I want to remove discretion from my trading. I just want to, again, give you an example. Let's go and look at Apple. I want to trade a stock that has a steady equity curve, that is consistently profitable on a long-term basis. I don't know which trade's going to work. The last two have not worked. I'm losing money on Apple on the last trade that I placed. I don't know that it's going to work. All I know that it does work on average. And it works consistently on average enough for me to not worry about, is this the one? I'm not trying to cherry pick. I'm not trying to be selective. I'm just trying to place the trade when it's supposed to be played with consistency when it sets up so that I can emulate that trade. And what we saw with Twitter is it's probably not worth trading. I don't want to spend the effort cherry picking. I can do it. I spent 12 years doing it, but you know what? I want to sleep at night. I don't want to worry about the Fed, earnings, reports, bullshit that's going on in the world. Insert your reason to find a reason not to trade. I want to take that out of my trading and bugger off and go and have fun. Sorry, on a soapbox again. You get the idea, folks. That's why we're doing this. It allows me to whimsically do these sessions on a Friday morning. I get to show you what I'm doing. You get to benefit from it. And if you want to go faster with me holding your hand doing it, we can certainly talk about that. Let's take a look at Tesla. I was also asked about Tesla. Is Tesla worth trading? Yeah, certainly profitable. And what I do know is actually, this is a long only stock for me. It's profitable long only. Looking at the details, Tesla is a long only stock. It's profitable if we take long and the shorts, but it's really profitable in the last 10 years on the long side. So yeah, it looks pretty decent, but I'm only going to trade it long. So can we trade Twitter? Yes, we can. So what are we waiting for right now? There's the 200. There's the 50. You're waiting for price to go back above all three moving averages. So you're looking for price to be, again, not the, if you see the crossover, we're back to waiting. But right now, it looks like you've got to get to about $950 before it's worth it, before it's back into a bullish posture. Again, sit in cash. Again, there's other things for us to trade. And the last one was AFRM. I don't recognize the ticker. AFRM, the ticker even. A tipper on the ticker. This is a brand, oh, there we go. This is a brand new stock. I've got no data. Guess what I'm going to do with this? I'm not going to trade this stock. The average prices are crossed over. There are sellable rallies. Where's my data? Is it worth trading AFRM, Affirm Holdings? I don't know. I've got no data to support any decision I could, would, should make on this stock. You everyone see the difference, the power of having a rule-based system. Like, should I, so now we're looking at this stock, you know, what stock should I trade? We're looking at ARFM. Should I trade it? You know, why this stock? You know, does the algorithm produce good results? No. Go and find something else to trade. That's what this is telling me. Again, I'll come back in a couple of years. I've only got a few years of data. It's just not firing off enough information for the algorithm. So again, it's not no to the, I can just to try and re-emphasize, it's not no to the trade. It's not no to this stock. It's just that the way that I want to trade, passively engaged in the markets from a time point of view, but aggressively involved from a volume and consistency point of view. Again, right now, we should all be looking at 25 stocks. Me personally, I'm pushing the accelerator. I'm going up to 150, and then the next is, 100, and then the next is going to be 150. I'm happy trading that number of positions. Appreciate not everyone is. Everyone should have accessible to them their favorite 25 stocks. You've got the rules. You can plug those rules into any of the softwares that's available these days. They've all got some sort of functionality. And the one I use is TradeStation. All my students get access to the tools that you're seeing me use here. And I'm using these tools for speed, for time, so that I can check in, check for trades, check outs, and go and do other things. So yeah, 25 stocks. Where were we? Oh yeah. So again, it's not no to the stock. It's just that if I was going to trade this stock, I've got to bring something else to the table. And as soon as you bring something else to the table, like you start asking, how do I trade this stock? How do I trade this stock? You're bringing subjectivity into it. I've got a strategy that works consistently, methodically on a group of stocks that are proven to work. I want to farm the opportunities. So let's do it. Let's spend, I don't see any more tickers. Thank you very much for participating. If you've got something, please feel free to share. I can take a look at it. I'm going to go through these 25 or as many as we can in the time that we got together. Before I do, Steve, you very kindly just shot this over to me. So this is, Steve's just literally sent it to me today, not 10 minutes ago, as we were talking about the strategy. The flat section is Steve doing his thing. So this is him tracking his performance. The flat section is going nowhere sideways, and the right side is when we finally plugged into my system. You've got a nice steady equity curve on your performance. That's amazing results. Thank you for sharing, Steve. Thank you for sharing. So again, you don't have to take my word for it. Like, it's not me saying that this works. This is my students consistently saying, when you finally plug into a strategy that's proven, time tested, research driven, blah, 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 insert your reason, it works. Don't have to take my word for it. ABC. Promise you I'm not breaking into a Michael Jackson song. We're looking at the ticker. Guess what we're going to do? Buy the dip. I'm not going to oops. The oops trade, sponsored by. We're going to buy the dip in the trend. Again, I mentioned this last week. I'm already in the trade, and it's quite literally gapped down. I don't know that it was going to do that. So one of the ways that I combat this is that firstly, I don't use stop losses. Hold on, back up the truck, Phil. Did you say don't use stop losses? I use options. Stock options to be specific, as an alternative to stock. I use the full price of the premium. So if the option is worth $5, it controls 100 shares. I can buy one contract for a full price of $500. So that is my risk. And if I buy, say, 150 days to expiration, then I've got 150 days to see if this dip works out. I don't need a stop loss. I don't manage losses because it's taken care of on the entry. That means that I can focus all my attention on emulating and hopefully outperforming the algorithm because of that simple switch from stock to stock options. So I'm in a trade right now with literally 4 days worth of hindsight. I've mistimed my entries, how I phrased it. It's not wrong. It's not a bad trade. We know that the algo produces results on average. It's an on average fantastic stock to trade. Maybe this is just one of the ones that didn't work out. I only know that with hindsight. I only know that this one was going to kick me in the shins. Again, I'm not out of this trade right now. I've, for the moment, mistimed it. Now, if you are looking for a new trade, you're waiting for price to go back above the averages, the Bible dip. Right, let's do it. ACAD. Average prices are crossed up, prices below our average prices. So we've got that mixed viewpoint. We're going to wait. Well, let me separate, do what I normally. Let's separate the bulls and the bears. What you just saw me do there was just that average price crossover. The average price crossover is what that is. So I've got the bullish trades and the bearish trades all marked off. Let's go back to ABC. So the bullish trades and the bearish trades marked off. In fact, what I'm going to do is just put the charts. So this is intentionally blank. They're intentionally blank. Going to focus all my attention over here on the left. So what I'm doing is I'm taking the algorithm that I've just mentioned to you. The average prices are in a bullish posture. The average price is in a bearish posture. So I know which ones are bullish and which ones are bearish. Mark, just to answer your question, naked option refers to a short selling. So you've got unlimited risk. I'm a buyer of options. So it's everything I do is defined risk. So the worst thing, think about it like a deposit. I'm buying deposits on stock. The worst thing that could happen is I lose my deposits. That's the worst that can happen. So I'm not naked. I'm not selling options. I'm only a buyer of options, just to answer your question really quickly. There's a huge distinction. So if I'm bearish on a stock and I want to profit from a downward movement in price, then I will still be a buyer, but I will buy puts. So everything that I do in the options world is defined risk. Again, if you're selling an option, that's not my bag, baby, and you're in the wrong place. Anyway, so average prices are crossed over bullish, average prices crossed over bearish. And what these red here means, these bearish stocks, everything is below the moving averages. So that is saying that it's already been in a sellable rally and it's now selling off. It should be profiting from downward movements in the price. So I can see visually, well, if I'm today's day one and I know this system, well, I've missed the boat on the bear side. I'll get the next rally in a downtrend. But right now, it's quite possible that if I try and place trades on these stocks, I could be chasing the move. So let's go to the bullish side. Let me just rejig and resort. So I'm looking for stocks that are above the 200, but below the 50 or the 20. So what you're just seeing me do here is I'm just putting some breaks here. So these two, COP and CVX, these are not only Bible dips, but they're starting to rally out of that dip. Let's go and take a look. And now we'll take a look at the charts. So there we go. So price is in a trend. It's been below the 50 there. It's been below the 50 here. So it's only just starting to accelerate back out of its Bible dip. Could be good to place the trade. Again, I've just placed mine already, CVX. But again, trying to focus my attention on why do that? Why do that ranking, sifting, and sorting? I'm trying to figure out what stock should I look at. Again, CVX, just looking at those two here. Blue, 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 average prices are crossed up. So that's telling me that the average price right now is above all three moving averages. Now, it's only just gone above, so that's still, in my mind, a Bible dip. I've already got a trade on. I don't need it. What has dipped? So this section here, what has dipped in the context of a trend? So what I can do is I can say that red, blue is saying price is above the 200, but it's below the 50 and below the 20. So that's what that Bible dip is. So to find that sequence, what would happen is average prices are crossed up here. It's below the 20, below the 50, and it identifies the Bible dip. So I've got a very visual way to say, is this a Bible dip? So there's the 1, 2, 3, 4 stocks that I'm going to look at right now. So even though I'm only looking at 25 stocks, I still need to look physically at 4 of them today. So if I'm looking for a brand new trade setup, and it's still no guarantee that I need to do anything today, but these are the 4 that I'm looking at right now. ABC, we've just looked at it, Bible dip. It's dipping in the context of a trend. It needs to go back above the 50-period moving average. It's not an automatic buy. When it goes above the 50, I'll be interested. Again, I'm already in a trade. I don't need it, but if you're looking at something, that's what it looks like based on what I've described to you so far. All state, ALL, next on the list. Average prices are crossed over. This is a little bit of a visual common sense thing. Again, this is one of the things that I do teach in the training. This is where we can apply. It's the only time we apply discretion, but when we look at the chart, it's like, actually, this is not trending. It does not start at the bottom left. It does not finish at the top right. The average prices are all squished and compressed and not doing anything. I've not got a trend. Let's leave it alone. However, if you don't see that, because it is discretion, we're trying to remove it, you can still apply the rules. You've got price between the moving averages. You're waiting for price to go back above them, and it needs to be at around $135. So there's 2 ways of approaching this. If you've got some skill at reading the chart, you can layer it into the mechanical rule sets. But if you've not got it, you don't have to. It's not mission critical because we've got the 20 years tested and tasted rules, data even, on these stocks. So the idea of doing that is, well, we should be able to at least accidentally make money on those stocks because they're already proven winners. LNG, the energy sector, is on fire. Bible dips in an uptrend. There we go. So price is dipping in the context of a trend. There's the 50-period moving average right there. It's just below it. So that's what a Bible dip looks like. It starts at the bottom left, finished top. So a little bit of visual confirmation, but mechanically we don't need to do it. There's the Bible dip, just waiting for price to go back above. The algo that I use has technically fired off a trade. That's what those lines are. They're automated. And again, if you're looking for a brand new trade, I'm already in something, so I don't need to. Again, an entry somewhere around $141 would be fine. TM, CTM, they're things that I've placed manually, Mark, just as little references to some trade management or some experiments that I do. I'm always trying to improve the strategy. I'm always testing and placing ideas. So I just put some visual cues or some phrases and text just to remind me of certain critical points and decisions that I've made on previous trades. I don't do it on every trade, but just when I'm doing something that's just testing something out, or I've got a different version of the algorithm that I'm just running and chewing some ideas over. So for testing purposes is the short answer instead of the long answer. Right, so they're the 4 things that I could be doing something on. These 4 I can ignore. The average prices are crossed up, but prices below all 4 moving averages. We could be looking at a direction change, so I don't need to check in on those. And the bearish trades, we've got, to be fair, on the bull side, we've got all of these are right next to the mechanical entries that we've described. So they're not far away, I think, with the exception of Allstate. So it was all, wasn't it? Yeah, with the exception of Allstate, they're all very close to needing action. So if you needed something, there's certainly something there. On the bear side of the ledger, so the other kind of the final piece of the puzzle that makes all this interesting and groovy and work without stress is having a 2-sided approach to this. You've got to have the bearish side. Now, obviously, month number 1, as I teach all my students, is going to be not the most difficult, but when you're trying to build out the portfolio, you're going to have to catch up to the rules, catch up to the algorithm on the group of stocks that you've chosen. But it is worth having a balance of bullish and bearish trades for the reasons that we've just seen this week. When the market does something funky, weird, or crazy and sells off a little bit harder, faster, and makes everyone panic, the bullish trades are probably not going to perform, and that's okay. But the bearish trades are going to accelerate. So when you plug into this strategy, or any strategy for that matter, you need to take the setups, bullish or bearish. Just because the market is going up or the market's going down, it doesn't mean that the individual stocks that represent the markets aren't doing their own thing. So AMAT is a bearish stock that's going down. Sell the rally in a downtrend. It's already started to move away from its average prices and hopefully show us some profits. It's an early stage trade. AMD, again, sell the rally in a downtrend. BBWI, these are all right next to their entry points. BBWI, sell the rally in a downtrend. BFH, Busferro, sell the rally in a downtrend. Can everyone see that? Now you know the rules. Now you know the secrets. You can't unsee it, can you? It's a simple framework. Instead of focusing, and I'm intentionally going through these stocks quite fast and not drawing up. When you know the framework, you go, there's the trade. There's sell the rally. There's the trade. Ford, sell the rally. ISRG, yeah. ISRG, sell the rally in a downtrend. Right now, it's selling off. We want to wait for the rally to sell the rally. Find a sellable rally. We've just had one, and it quite literally went from $300 down to $220. Sell the rally. Focus on a small group of stocks and trade them consistently and methodically every day, every week, every month. I don't know which trade's going to work. I just know that these group of trades work favorably for the way that I want to trade. Actively passive, essentially. You get the benefits of both being passively trading and actively engaged in the markets. And passive from a time point of view. I'm not spending all day, every day doing it. And even if you have to go through all 25 stocks as we're doing right now, it shouldn't take you more than 20 to 30 minutes. I want to focus in quickly, so I tend to use my little traffic light system. Okay, which 4 stocks am I going to look at? Those are the 4 I'm looking at today. Great, that's all I'm looking at. And everything else I can either let go. Eventually, you'll catch up with the strategy. You'll have something on most things. And the way that the portfolio style approach work is you've got some bullish trades, some bearish trades, and some things just going to be waiting or just not working. And when the market swings up, you'll be profiting on the upswing. And when the market swings down, you'll profit on the downswing. So for example, on the bullish trades, on that move up there, let me change colors. On that rally there last week, the bullish trades were bulling. They were going up. So even when the market is in sell the rally mode, on those little upswings, the bullish phases, the retracements in a downtrend, the bullish side of the portfolio will profit. Now, when the market swings down, then the bearish side of the portfolio should really accelerate, which is what we've just looked at on all the bearish trades over here. They should be accelerating in a profit, and it allow you to take a profit at a predetermined, predefined target level so that you can see taking money out of the markets every day, every week, every month, consistently until the end of the world. So that you can get these type. Well, I can't guarantee you will get these results. That would be bad of me to say that, but you should be able to emulate something comparable. So RCL, we mentioned it 10 days ago. Run, we've mentioned it many times this year. Coop, many times this year. Teladoc, many times this year. Starbucks, many times this year. And just last week, a sellable rally, we looked at it in real time all of this year. And then last week, it fired off a signal. So my apologies, 10 days ago, it set off a signal. SPY, sellable rally, has reached its target. So go and do it. Go and do it. Rodrigo, a couple of stock tickers. Let's go and take a look at them. Thank you again. Let's take a look at them. We get those results. Absolutely. I think, Colin, you've just messaged only to panelists. So if you want to send that message to everyone else, feel free to. Colin's just saying we all get those results. He's one of my insiders, which is cool and groovy. TSN. Rodrigo, that they have been on my list. I've rejiggled my list. So Rodrigo, again, long time follower here. So Tyson Foods, it has been, but the latest version of the algorithm, it's showing that it's positive. Again, with some of the improvements, it's not that it's impossible to trade. It's just, it's a little bit janky. It's not impossible. It's obviously steadily going up, but I would rather trade something else that has a greater, steadier performance. Again, not impossible. Tyson has been great to me for a long, long time, but just with the latest version of the algo back in October, I'm just like, you know what, maybe I should just rethink this for its inclusion. It's on the master universe of things that I can trade. It's just, you know what, other stocks are better to trade compared to this. That's what that means. Again, it's not impossible. If you like trading it, I'd say go for it. I mean, I've had great trades on this. SQM is the other stock. Marriott is on the list. It's in the top 50, just not in the top 25. SQM is on the list. It's a good stock to trade. There it is right there. Again, it might be in the top 50. It's just not in the top 25. So that's just probably why you've not seen it there. PXD, it is in the top 50. It's just not in the top 25. It's not that, it's just that all I've done is taken the best performance. Again, it's not that, by comparison to some of the others, it's a little bit janky. So I'm just taking the steady equity curve on other stocks in the energy sector, like LNG. Is it LNG? LNG. LNG's got a better equity curve than PXD. If I have to choose between PXD and LNG, which are both in the energy sector, I'm going to trade LNG. If I can only choose one of them, I'm going to do this one. So it's not that I can't trade PXD. I do trade PXD, but if I'm just trying to illustrate, if I could only choose one of them, this is the one. It's got a steadier equity curve. It's going to give me less headache to trade. That's how I'm reading this. So you can trade the other things. They've all got positive equity curves. They're all got good returns. It's just, I only want to trade a small number of stocks consistently, regularly, methodically, and not have to worry about, should I trade this? That's the question that lots of people ask. Should I trade this stock? I don't want to ever say, well, you can. I don't want to ever be playing the game of shoulda, woulda, coulda, if only. I want a binary decision. What stock shall I trade? These 25. These are the best 25 stocks. Trade them. That gives me a very confident approach to go, there's the trade. It's set up as we've just talked about. Put the trade on. Because if I'm not doing that, then I'm not following the rules. I'm not following the algo. I'm second guessing myself. And this is when you'll start to not sleep at night. You'll be pissed off. You'll FOMOing, you're diamond handling. You'll think, oh shit, I've missed this trade. I'll double up on the next one. You start to cost average down. And then suddenly your account blows up because you're doing something stupid. I want a steady, consistent performance. And I don't know which which trades are going to make me money. I know which stocks make money on average, so I'm going to focus on that. Like any other business in the world, it's on average profits that I'm trying to make. I am not trying to win a lottery ticket by selecting the right stock on the right day at the right time. It's a fool's errand. As evidenced by this week's results. Cool. Right. I think we should think about landing this plane, folks. Before we do, what was your biggest takeaway? What was your biggest takeaway? Lots of new names. Again, let's just see. Banu, Brett, Colin, obviously, Dennis, Johns, Mark, what Mark? Raj, Randall, Rodrigo, Steve, Shirley, that guy, number 12. That makes me laugh. Tom, hello, Tom, welcome back. Adrian, hello, welcome back. Flamingos can dance, they can. That's just referencing the video that Mark sent me. They're all doing the happy dance in that video. It was quality. I don't know why I've got a thing for them. So that was your big takeaway then, Colin. Right then, folks, if there's no further business, let's land this plane. Before we do go, as always, a heartfelt thank you for deciding to spend an hour with me today. We could all be doing other things, as I like to say, and I did say several times at the beginning, we can do other things because it's a choice. And I really appreciate the fact that you've decided to spend some of your time with me. Hopefully you've got something from it. Once again, you've got the rules, the concepts that I use that have made me money over the last 28 years. All I would wish that you would do is that you go and apply it, go and take action. If you need help with it, if you want to speed up your process, you can work more closely with me. If you don't want to, that's cool as well. Lots of people get lots of benefit from these free open sessions. But if you want to work more closely with me, just hit reply on any of the emails that you receive from me, and we'll take it from there. All right, folks, with that said, let's do it. Let's land the plane. Let's dock the Tesla. Let's charge the boat. Let's call it a session. Have a great day, folks. Have a great weekend. If you need me, feel free to shoot me a message in the Slack community. I am most active there. Most people send me a message at some point through the day, often having spotted flamingos in the wild. But if you need me, that's where I am. Have a wonderful weekend, and I'll see you all next time. Bye for now. Oh, I nearly forgot. Toodle-oo. Cheerio, folks.